Welcome to the Trading Lounge, and here we're looking at the S&P 500 on a 2-hour chart, and we were looking for wave 4 to complete through here, and then a wave 5 up, which is on its way now. Once this is complete here, the most important level here is the 1510. It may not get there. It may just reach the 15.8, but looking for wave 5 up, and then a correction from that point there as well. And that's the same with the Dow Jones as well. We're looking for a little wave 4 and a little wave 5 up, closer to the 14,000 here. This will move up through here, as all trends of different degrees have a beginning, a middle, and an end. And if we have a look at that, we can see here that on the 2-minute chart, we can see that this is the beginning, the building process. People recognize that the move is sort of on there, so the third wave comes into the process. So it's the middle where all the volume comes in, and then once everybody's in there, then there's no one else to push it up from that point. So you've got the beginning, which the middle, and the end. So the beginning and the end always look quite similar to one another as well. So look, bottom line is that this trend up here needs to be corrected. That said, the general trend for the markets is to the upside, while the US dollar is pushing to the downside, and has broken to the downside, and we'll look at that. We'll look at that shortly. The European markets, the FTSE here at the 6,300 has done its little ABC, and it's pushing up here, the same as the US markets as well. It will have, as long as it maintains support on Group 1 here, the 63.20 and the 63.30. Support on the 63.30 will take it higher, which it would, well, it did to the 50 there. That's how much you can sort of guarantee. But looking for this little 5-wave structure here to correct itself back down and then move to the upside. The DAX is the same as well. We were looking for the DAX here to pull back into well, close to the 7,800, the 78.20 there as a 38.2 retracement level. It's done that, but what I wanted to point out here is that this move down through here appears to be in 5 waves, the 1, 2, 3, 4, 5. So that means that because we've got 5 here, after a corrective move here, we'll get another 5 here. So this wave 4 here, because that's a nice strong third wave here, this will be an A and a B and a C wave, and then a move higher there. So just be careful of that swing if you're trading that. The Australian market has got some support on top of Group 2 now. It was resistance, and now it's checking for support. But once again, just got to be a little bit careful here, because this move down through here is possibly in 5 waves, which would make this a 3-wave move to the upside through here. So we may get another retest back down through here, but in all cases, once the 72 has got support here, then you'd be long there, looking to build on top of the 48.80, the 80. This is all Group 2 here, 65.72 and the 80, and looking to get up further up through here. Let me just have a little look through here. Yeah, it's still expanding to the upside, so yeah, still trade long there. And we've also got lower, the lower US dollar means higher indices, higher commodities, because commodities are traded in US dollars, of course, and higher currency pairs as well. All right, let's have a look at copper and oil as well. Okay, the copper market here is on track with our expectations. So the 65 here, we're looking for that to show us a little bit of support with a lower US dollar, and all that's come about. If we just have a quick look at the US dollar while we're here, we can just on the 2-hour chart here, we were looking at this area through here. We'll look at this in the Forex section a bit in more detail, but looking for it to break lower, and that's occurred. And we expect it to come down further as well, so we will be down here with it. So while the US dollar is moving down through here, then we're going to get solid trends in other markets. So with this particular market through here, there will be obviously some sort of resistance through the tops here, of course, but that should come to pass in due course. So we're looking for further upside here because of this three-wave correction here. Then we're looking for new highs above here, and this would be the wave 1, the wave 2 here, pulling back the 61.8 with a little sort of ABC correction through there. And we should start seeing a positive move to the upside through here. So that's good for the materials sector, the BHPs and the Rios and so forth. And we, as mentioned yesterday, we know that the banking sector is firm, but it's nice if the materials sector can move with the finance sector, because then we get a strong indice move, and that's of course a stronger move across the broader market and a stronger sentiment as well. So a good time to make money. So look, that's all really positive news through here. And oil is the same as well. We're looking for this to move up to the next level from 95, 98 is the next level. It still hasn't completed that move there, but we expect that to move higher. The energy sector was one of the leading sectors yesterday, last night, in the last session, the US there. Also mentioned yesterday that oil follows stock, and yesterday in the robo section we were looking at oil being strong and also banks being strong as well. That's still the case, but we can just sort of add the material sector to that now, which is good. Yeah, the other thing that I just want to point out too is that we've got the ADP figures coming out tonight, the private employment figures from the US. So that's important because they will set the stage for Friday's non-farm payroll figures. So those ADP figures will be important tonight. So just be mindful of those if you're trading through that session. Alrighty, the gold market. We've got our little bounce off the medium level here, the 1650. Yeah, so we'll just pull that apart a little bit there. But basically I see this as being a impulse wave to the upside. So this is group 2 here, 65, 72 on the 80. So we should see 5 waves here, 3 waves here, and 5 waves here, and then a move back down. Okay, so an ABC, a corrective rally. And if we look at that on the 15-minute chart here, we can see, let's get a little bit more in here, just a little quick count through here. We've got up for wave 1, back for wave 2, and then we've got all the way up for wave 3 here, and there'll be 5 waves in here. You should be able to work out the third wave will be in the middle here, and the 5th wave, 4th wave here, the 5th wave here, this little structure here, this 1, 2, 3, 4, 5 for the third wave here. So you should pull that apart. Basically we've got the 1, the 2, the 3, the 4, and the 5. So this will make wave A, and this is the B wave unfolding here. The B wave will be in 3 waves, and it can pull back to the 61.8 retracement level, so it's down at the 1657 or the 50. Gold works quite nicely to the 50, actually, more so than the 61.8. That's just some work that I did like years and years ago, looking at everything, but things may have changed a little bit, but just bear that in mind if you're trading this. And also the levels as well. The 1665 here will be the beginning of group 2 here. Unusual number, but as you can see, it works well. I call it the 1665 is the 65 number, the same as the medium level down here at 1650 is a 65 number as well. And you'll see it in stocks as well at $6.50 or $16.50 and so forth. Alrighty, let's have a look at the FX. Just starting on the US dollar here on the daily chart. I know we've been over this before, but it's important now because we've got the 80 as resistance. We know that this move down through here is the direction of the market because this is a corrective pattern here in 3 waves. So that makes it makes this a corrective pattern, and it's been a long time, but we've been working through this, and now we're looking at a break through here. and it would be the 79.50 that would really help us with this situation of breaking lower. And that's expected to occur now, and we've got the AD as resistance here, so we'll be looking at further moves down towards here and taking out this low here. But once this low does work its way through here as such, then once that's done there, then that whole sequence here to the downside here is completed, really, because we're looking at an A and a B and a C down here, and this will be this low down here wherever it comes in, and we'll be tracking it will be the top of the stock market as well. So then we'll see this push up from this point here. So that's going to be the turning point for that. So that needs to be paid attention to on the way down through here. This is the 1 hour chart here, and yesterday we were talking about this little area here and breaking lower, and it's broken through really nicely and quickly, so that's quite pleasing. The midpoint here, the 79.50 in Elliott terms, would be the confirmation that that's going to move lower from that point, but that's pretty much confirmed. Yeah, because I mean, even yesterday I was talking about the, once the 79.72 becomes the resistance, which it has been tested once, that will be fine there. So we can pretty much call this in here as wave 1 here and wave 2 here, because it's rather large in that sense, and this is picking up speed here. So we'll see this move further down through here. So there'll be something like this here. So yeah, so that's the positive news for the dollar here, and as I mentioned, this is strong for the material sector as well. Also the Australian dollar and the S&P 500, and of course the euro as well, as a direct reflection and a pretty much a mirror image as such. And for the euro here on the 1 hour chart, we were looking at this move here being corrective through here. So looking for 3 swings through here. It didn't really give us a very nice C wave through here in 5 waves, so that would be labelled differently through here as a 3-wave structure, a 3-wave structure, and a 3-wave structure, WXY, I guess. But we're looking for this impulse wave up here. And in this wave up through here, if I can just get that on, the target was the 135, and that would still be the case as well. So we'll be looking for a 5-wave structure, just topping the 135, and then having an A and a B and a C wave through here, and then pushing up higher once again as well. And this 2-minute chart here on the euro, apologies for going so small, but it's okay because we can kind of get that low in from here. Once that corrective pattern had finished here, you see that with even not having, you don't need to count that well, but what you do need to recognize is the building process at the beginning of a trend, the middle of the trend where the most volume is coming in. The most powerful point in the trend is wave 3. So this makes this wave 4 here, and this is wave 5 moving up through here. So the 1, the 2, the 3, the 4, and the 5, little A, B, C here. So it's still pushing up higher through here. It should have a high in the group 1 area up here, micro group 1. Now it's got support on group 2 through here, but the 135 will be the balance line, and it should carry a little bit of weight. I know that we're in a strong market. 5 is the second strongest number, so any larger correction will be done within group 1 here, and support of group 2 here, and the 35 will be the balance line through there as well. But all good. Right, and the Australian dollar. Now, we've got this count here of this, which I talked about yesterday, moving down here further, but it's not confirmed just yet, because I haven't seen what I need to see from a trading levels point of view is I need to see the 105 actually retested and a failed retest. It's got to sort of reject the 105. So the bounce off the 104, and as I mentioned yesterday, the 104 is a very strong support line through the market. Yesterday we had a bit of a squizzy through here. You can just see that the 104, carries a fair bit of weight through here. So, while that is support, then So basically, this move up through here. We've got this label down as 1, 2, and 3 here, but I also need to point out too that could quite easily be an A and a B and a C wave through here. And what we would be looking for, if we're going to look at a bullish market, I would turn bullish once the 105 had support here. Then we would just naturally be bullish from that point there. But as it stands, we need to take a bearish bias through the 105. It's below it. So we need to count it in this particular way. And in counting in this particular way would be as the 1, the 2, the 3, and this would be wave 4 going back. Now, wave 4 is normally sideways and complicated, so we'll see how we go with that. But this move up through here at minimum would be the A wave, then a B wave, then a C wave, retesting here and then moving down through there. So if we have a closer look at that from here, we'd be looking, this is just the 1 hour chart here, we'll be looking at this is the A wave up here, the B wave here, and the C wave up here for wave 4. So looking for a failed retest at this point. This move here, by the by, is in 5 waves, and we can have a look at that in a moment. But once again, we've got the building process at the beginning, then we've got the strong bit in the middle, the 3rd wave, where the most volume comes in, and then the end, the beginning, the middle, and the end. The end and the beginning are basically the same, and they're basically the same when you get the extension in the wave 3 here. So if you get an extension in wave 3, that means that wave 1 and wave 5 will be pretty much the same in terms of time and price range. So it's a good way to understand that. And then once you understand that, you always work to the closest, largest numbers, and the levels work reasonably well in terms of psychology and also in geometry with the Fibonacci sequence as well, nature's numbers. So look, we're looking at 5 waves up here, 3 waves back down, which would be the 50% or the 61.8% retracement level, and then this wave over here, the A wave and the C wave in a correction have normally got some type of relationship in terms of equality or in terms of the 618. Also within corrections as well, that you get the guideline of alternation, where if this one is simple, then the next one will be complex, and the next one could be simple or more complex. So that little moving up through there on the 15-minute chart, because if you're counting Elliott sort of, getting down into it, well, then the 5-minute and the 15-minute chart are kind of nice. You kind of get a nice balanced view on that. But counting the 5 waves out through here, slightly different than we've got on the Elliott chart, but basically up for 1 and back for 2 of this degree. And then we're looking for wave 3 up, which would be up for 1 and back for 2. And then all the way up for the 3rd wave, because inside the 3rd wave here there would be 5 waves as well. There would be 1, 2, 3, 4, 5 for 1, back for 2, then the 3rd wave here, and then the 4th wave, and then the 1, 2, 3, 4, 5 for the 3rd wave. There will also be 5 waves in the 3rd wave here, which would be the 1, the 2, the 3, the 4, and the 5. There will also be 5 waves in this 3rd here. So when trading Elliott, you're always looking for the 3rd of the 3rd of the 3rd, which is this little guy here. So this little structure here is finishing through here into group 2. So there could be one more little wave here before we see that up for that 5th wave there. So if you're going to be trading, from A to B here and then up to 4 for C and so forth, the C wave will always also be in 5 waves. The B wave here will be in 3 waves. So it's not a good idea to trade through here. It's a little bit tricky, but just be careful. In Elliott terms, we don't normally trade the 4th wave because it can get complicated. Out of the 11 or 12 corrections, the wave 4 is normally the most complicated. It's got shorter trading ranges, overlapping wave structures, and just gets sort of messy. So it's Yeah. Alrighty. Well, that's it. So Wednesday could be a day that can sort of open, sort of trade lower in the morning session, then close higher for the day. A little bit like sort of Tuesdays and Thursdays can be the bear day in a bullish weekly cycle. So just it's good to have these things in mind. You know, may not play out, but if it does play out, it gives you some sort of guidepost to work from. Look, as I mentioned, the ADP figures tonight will be important because they will set the tone for Friday, and Friday sets the tone for Monday. So it helps us with that continuity and that momentum through the market. So if we get good figures tonight in the ADP figures, then we can expect Friday to be bullish and Monday to be bullish. If that's not the case, then it's not the case. So it just helps support structures and trading and so forth. So, alrighty, well, that's it. So good morning and good luck.